Running a childcare business requires dedication, passion, and careful financial management. As a provider of childcare, you play a vital role in shaping the lives of young children and supporting families. But you also need to make sure you are maximizing your revenue and expenses to get the compensation for this hard work. All too many times, childcare business owners miss possible deductions, ones that can quickly add up to more money in their pockets. The information contained here has been prepared by Civitas Strategies on behalf of the New Mexico Early Childhood Education and Care Department, West, and Growing Up New Mexico, and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited. Only non-commercial uses of this work are permitted. In this presentation, we will provide you with valuable insights into commonly overlooked or misunderstood tax deductions. Whether you're just starting your childcare business or have been nurturing young minds for years, understanding the deductions available to you can help minimize your tax liability while maximizing the financial health of your business. There are many deductions that are possible for childcare providers. However, based on our work with family and center care business owners, we've identified several that could have the greatest impact on reducing your tax bill. Family childcare providers are eligible to use a unique formula to determine the deduction of the business use of their home. They are able to deduct areas that are exclusive use, those areas that are only used for childcare, or regular use, those used on an ongoing basis for care. They can also increase their deduction by recording not only the time they spend with children, but also planning, preparing for, and cleaning up after care. As a result, they can get a deduction for a significant part of their rent or mortgage interest, property taxes, utilities, and home maintenance costs. Center care business owners also may be able to deduct a home office. This can be trickier since you can't also have an on-site office. But we have seen many cases where the center owner is using on-site space to a point where administrative duties have to be performed out of their home. Again, this deduction can help you include costs of rent or mortgage interest, property taxes, utilities, and home maintenance costs. The cost of liability insurance, property insurance, and health insurance for employees are likely deductible. These can often be overlooked as you assemble your expenses for the year. Property taxes related to the facility you used for your childcare business can be deducted. Again, for family childcare businesses, you will want to use your time-space percentage to determine the business portion. If you provide meals and snacks to the children in your care, a portion of these expenses could be deductible. Keep detailed records of these expenses. If you are a family childcare provider, you can use the CACFP Tier 1 standard meal rate to calculate your meals deduction, even if you don't participate in the program. In every case we have seen, this results in a higher deduction and much easier process than tracking the actual cost of each meal. Expenses for promoting your childcare services, including website development, social media costs, advertising fees, and printing costs, are deductible. Misclassifying educators as contractors when they should be employees can lead to legal and financial penalties. The distinction is based on factors such as control over the work, level of independence, and whether the work is integral to your business. If you hire your child who is under the age of 18 to work in your childcare business, you may be able to deduct their wages as a business expense without paying employment taxes, while also teaching your child about financial responsibility. However, the work must be legitimate and age appropriate, and the wages paid should be reasonable for the services provided. Fees paid to consultants, lawyers, or accountants, or even tax preparation professionals for business related advice are deductible as business expenses. Depreciation is a way to spread out the cost of larger expenses, over $2,500, over time, because they lose value as they get older or worn out. When you calculate depreciation, you can take a portion of the original cost as a deduction on your taxes each year. Figuring out depreciation can be a bit tricky, so it's a good idea to talk to a tax professional who can guide you through it and make sure you're getting all the deductions you deserve. You can deduct expenses for office supplies like paper, pens, printer ink, and other supplies used for administrative tasks. Fees associated with business bank accounts, including monthly service charges and transaction fees, are deductible. Lumping various expenses under an other expenses category can hinder accurate record keeping and tax preparation. Accordingly, if you can use existing categories like supplies, you can reduce the complexity of your taxes and questions that may arise in IRS review. Many providers believe they can deduct unpaid parent fees. This is not correct. If they have not paid you, you may pursue the amount in court, but unfortunately, it would not be deductible. Membership fees for NAFCC, NAEYC, and other organizations and associations related to childcare are deductible. Costs of uniforms required for your childcare staff are deductible. Do you know these need to be work-only uniforms? Purchasing other clothing that you may choose to only use at work but could be used personally are not deductible. For example, a shirt with your business logo that everyone has to wear would be deductible. However, a top you choose to wear to work, no requirement, would not be. Interest on business loans, including economic injury disaster loans and unforgiven paycheck protection program loans, also can be deducted. If you transport children in your care, portion of your vehicle expenses, such as gas, maintenance, and insurance, may be deductible. You can also count other trips, like to the supermarket to buy food for your business when the primary purpose of the trip is work-related. Always keep detailed records of mileage. Deduct the costs of supplies such as art materials, educational resources, and cleaning supplies that are used in your childcare business. Don't forget to include all the costs for preparing and serving food and meals. These can add up. Everything from paper towels to napkins and containers for storing leftovers can be included. Toys and the batteries for them are deductible. If you are a home provider, be careful of deducting 100% of toys that are also used by your own children. Instead, deduct a percentage based on the time they are used. Expenses for software used to manage scheduling, billing, and other administrative tasks are deductible. Costs associated with workshops, seminars, or courses related to childcare and early childhood education can be deducted. If your mobile is your only phone, it isn't deductible. However, the cost of a second line into your home used exclusively for business is a deductible business expense. Family childcare providers can only deduct a business-only mobile phone if the mobile phone is a second line. If you rent or own the property where you operate your childcare business, you can deduct a percentage of the rent or mortgage interest based on the space used for business activities. For centers, this is likely the full amount. Family childcare providers will want to use their time-space calculation. If you are a family childcare business and you itemize your personal taxes, you can do the balance of your mortgage interest on Schedule A. For example, if your time-space percentage is 60%, then 60% of your mortgage interest can go under the business use of your home and 40% under a personal expense on a Schedule A. If you employ your spouse in your childcare business, you can deduct their wages as a legitimate business expense. However, similar to hiring your child, the wages paid must be reasonable for the services they provide. Unlike your child, you do need to pay employment taxes. The costs related to the startup of your childcare business may be deductible when you become open for business. This can include many of the same expenses you can use when you are open, like toys, office costs, and facility or home costs. The concept of cost of goods sold, or COGS, is primarily applicable to businesses that sell physical products, such as retail stores or manufacturers. COGS represents the direct cost of producing the goods being sold, including materials, labor, and manufacturing overhead. It's used to calculate the gross profit of a business. However, for service-based businesses like childcare providers, COGS typically doesn't apply and could lead to confusion about your expenses with the IRS. Costs associated with obtaining and renewing licenses and certifications required for your childcare business are deductible. Always keep in mind that no matter which deduction, it's essential to maintain organized and accurate records for all of these expenses to ensure that you can claim the deductions you're entitled to while adhering to tax laws. Need more help? Visit www.crisernm.org to find our contact information, sign up for coaching, Crisair New Mexico provider resources, ECECD recommended tools to help build your business, and more. All resources are available in English and Spanish.